All right, guys, there could be major movement in the market tomorrow, and that is because of the jobs report that's coming out. I'm going to go over, like what I expect, why I expect that, and how I expect the market to overall react. So let's actually take a look at the CNBC report first. Friday's job market could confirm a slowing labor market. Now, I do think initially stocks might actually react worse than crypto. The August jobs report on Friday is expected to confirm the labor market is weakening. That's actually good news because that means we're getting a rate cut, and we've been talking about that for a long time. However, the article is right saying that it can't be too slow, but it also can't go over the expected amount. So essentially, they expect 75,000 jobs to be added last month, and that's only slightly higher than the 73,000 added in the July report. Remember, this is the August report, not the September report, because it reports a month backward. So investors may be able to shrug off a soft report so long as the headline number manages to hit a sweet spot. And that sweet spot is between 70,000 and 95,000. You don't want it to be lower than 70,000 because that means the economy is really weakening. You don't really want it to be above 95,000. That means the economy is still strong, and that might make Powell not do a rate cut. So the August jobs report will be heavily scrutinized for another reason. It will be the first after poor jobs data and company revisions last month prompted President Donald Trump to fire the U.S. Bureau of Labor Statistics Commissioner. It's a decision that has spurred fears of government overreach and cast doubt over federal economic data. Trump nominated conservative economist E.J. Antoni to be the new head of the BLS. William Wyatrowski is an acting commissioner until Antoni is confirmed. The stock market could come under pressure if the jobs figure is outside of the expected range from traders. Luke Tiley, chief economist at the Wilmington Trust, worries a downside surprise is coming in the jobs data. Now, a downside surprise would have to be significantly down. We're not just talking about like 70,000 or 69,000. They're actually afraid it could be negative. If it's negative, we're definitely taking a big hit first. But even if we do take a big hit first, I think we will recover pretty fast because if we take a giant hit, that means we might actually get a more than 25 basis point cut, and that would spur up the market. The economist who is projecting non-farm payrolls growth of 75K in August said that he expects a negative jobs number will come in the second half of this year. They're not saying this time, but sometime in the second half of this year. And of course, they're saying that like it could be next month, but it also could not be next month. Another private report said about 54,000. Now, after that private report saying 54,000 came out, which is significantly softer than the 75,000 projected by Wall Street, the stock market didn't really budge all that much, which means 54,000 is still in the expected range. So I think like anywhere above 50,000 is good. Like basically if we have 50 to 90,000, it's good. I actually think I want it to be around 60,000, maybe 70,000, but I think a number slightly under 70K would actually light a fire under Jerome Powell's ass to actually cut some rates, maybe even 50 basis point cut, but I think 25 basis point cut at least, and that would guarantee it, while not like making everyone go crazy about a really, really weakening jobs market. And a lot of companies aren't hiring right now because they're uncertain, and the tariffs make them very uncertain. We all know that an appeals court has actually declared Donald Trump's tariffs illegal, and that relies on the Supreme Court to either affirm or deny it. If they actually affirm it, Trump basically has no other avenues to make his tariffs legal, and he would have to give up on most of his tariffs. I'm sure he'll try to think of some other way to mess things up, but if they're declared illegal, I think that'd be a big breath of relief to farmers and small businesses. And I think some of that hiring can get back on track and the economy can actually have like more stability. I think even with high interest rates, if the economy has more stability, overall, I do think like that's going to help the crypto market. So I do think that they're going to make that decision before Thanksgiving. But if the labor numbers, regardless of that, if the labor numbers come in somewhere around 50,000 to maybe like 80, 90,000, I think we are going to actually see a little bit of a bump in the price. And Wall Street reacted fairly well to projected lower numbers. I think that's kind of what Wall Street wants because even more than like good numbers, they want a low interest rate, and that definitely helps them. get that low interest rate. Now, 75K is going to be some of the lowest that we've had since the pandemic, but that's perfectly fine. I think people kind of expect that, especially with the tariffs. That's going to up like the prices that companies have to pay for goods. And in order to kind of like streamline some of their costs, they had to lay off some workers or at least stop hiring some workers. So I kind of expect that to stick for at least a few months. If Trump's tariffs get declared invalid, I expect some of that hiring to come back, but that fight is going to probably like last until at least mid-November. So that's the way I see things. The other big news is that Trump's WLFI has frozen the account of one of its biggest holders, and that holder is the famous His Excellency Justin Sun. So they actually froze over 550 million of its advisor Justin Sun's assets. The WLFI project indicated that it would protect the token's value even from its most powerful insiders. But that I think is more or less BS because insiders sold $700 million of WLFI hours after it launched. That's why the coin actually tanked from the initial 46 cents all the way down to 18 cents. And actually, before they stopped Sun selling, I think it went down to 16.5. But after that, I think some of the retail investors gained a little bit of confidence and it went back up to around 18 cents. Now, most of the selling was not Justin Sun. Justin Sun only sold about 9 million coins, I think, and he wanted to sell more, but they froze his account. Most of the selling is with other big insiders. Now, Justin Sun's sales can actually be tracked through HTX because, of course, HTX is Justin Sun's exchange. However, much of the sales actually went through exchanges like Binance. So that tells you that is not Mr. Sun's doing. So either way, some of these insiders bought for as little as 1.5 cents to 5 cents. So obviously when it debuted at 46 cents, and I'm guessing a lot of these insiders are like the Trump team themselves. It's kind of just like Trump coin. Like their insiders are like the teams themselves and like the Trump family and associates. And they made a boatload of money on this specific launch. So that's actually what happened today. World Liberty Financial's governance token, WLFI, rose 8% on Tuesday, adding around 400 million to its market cap after project leaders froze the holdings of crypto entrepreneur Justin Sun. So definitely it's not decentralized, because if it was decentralized, they couldn't freeze it so easily. It's obviously a centralized project. The move locked up nearly 3 billion tokens, drastically altering the token's liquidity profile just days after its volatile launch. According to the project, Sun's wallet address was blacklisted, freezing 540 million unlocked WLFI tokens valued at about 101 million and 2.4 billion stake tokens worth approximately 452 million in total. The freeze applied to 2.94 billion tokens. So they froze 2.94 billion tokens. The total supply of WLFI is 100 billion with a circulating supply of around 24 billion. So 2.94 in the circulating supply is a large supply. And that's, I think, what Justin Sun owns right now. So the decision followed allegations that an exchange systematically sold user deposits in a way that pressured the market. I personally think this is like Justin Sun wanted to sell its own coins. But like I said, he's not the major seller. Inside investors offloaded nearly 700 million tokens within hours of open trading, and it was not on HTX, which is Justin Sun's exchange. They sold them on Binance, OKX, and Gate, and that already drove the price down to 25 cents. Further selling afterward drove the price down even more. And of course, early backers, which obviously includes the Trump teams themselves, exited with gains of up to 20 times their original investment, which is a really sweet ROI. Basically, roughly 56% of the supply was controlled by insiders, while entities linked to Trump family retained 22.5 billion coins. Remember, the overall supply is 100 billion. The circulating supply right now is 24 billion. I don't know how much of the 22.5 billion is locked, but there is a significant amount that they have in circulation. In addition to that, they also have rights to 75% of the project's revenues. And of course, they claimed it was a decentralized Trump-backed initiative, but we all know that is a lie because they just froze Justin Sun's coins. So it's obviously very, very centralized. He actually became involved earlier this year, and he invested $75 million and was named an advisor. Now, I don't think he actually thought it was a great investment. Obviously, getting in on pre-sale prices, he's still way, way up right now. But he has about 900 million before the freeze. So that's kind of like what's going on right now. In terms of WLFI, I don't know if I would buy it. I probably wouldn't, just based on what happened right after launch. I think it's another one of those like Donald Trump grifts where he's basically using it to enrich himself. And I think a lot of the selling was probably due to his own team. But Justin Sun did actually try to pull a fast one, and he was actually stopped. And the fact is, like, since they froze one of their major investors, it does go to show you that the project is indeed not decentralized. So that is a big, big deal. On some good news, the SEC has actually revealed a framework for regulations that includes crypto safe harbors and broker-dealer reforms. Obviously, a big departure from Gary Gensler's SEC. So U.S. SEC Chair Paul Atkins has released a regulatory agenda containing proposed rules that could significantly affect how the agency handles digital assets. They released about 20 proposed rules as part of its spring 2025 agenda. Though each proposal varies in terms of potential impact on the crypto industry, many suggested that the Commission would continue to soften its enforcement approach in establishing safe harbors and restructuring existing regulations. Obviously, they basically say they want to loosen regulations while dissuading people from crypto fraud. I don't really believe that last one because they kind of did disband the crypto enforcement unit of the SEC as well as the DOJ, so no one's going to be enforcing much of anything. So in the next 3.5 years, I expect people in crypto to be able to get away with just about anything because there's literally no enforcement at this point. But they do want to make some crypto safe harbor provisions, and I think that will actually help people who want to do things the right way. So among the proposed rules in the SEC agenda was including certain exemptions and safe harbors related to the offer and sale of crypto assets and amending the Exchange Act to account for the trading of crypto assets on alternative trading systems and national securities exchanges. The modifications could allow crypto companies to operate with less regulatory oversight and reduce risk of legal action. They're also going to kind of redefine the Securities Act of 1934 and basically rewrite it where crypto assets are not securities, which would be very, very helpful to the crypto market. Overall, I think at least for the next 3 years, it's probably a plus for the crypto industry. Yes, there are going to be a lot more scams, but there were always a lot of scams in crypto. That's kind of why people look at it as a scammy kind of industry, mainly because it is. There's not saying there's not a lot of good projects, but there are a lot of crap projects as well. And you're going to see more of those as the regulations get looser and looser in the next couple of years. Obviously, they also want to reduce the responsibility for broker-dealer financial responsibility rules, and that could lessen the burden on crypto companies reporting data. So basically, I think this is weakening KYC AML. It is weakening the possibility of enforcement for crypto scams and a lot of things like that. Some people might not see this as a positive, but I actually do think if you're trying to make a big bag in crypto, having that wild, wild west come back probably does favor you. Yes, there is way more risk in it, but at the same time, you do have a higher chance to get into a bigger multiplier. There's going to be more memes. There's going to be more rug pulls. There's going to be more random projects that you could possibly get a higher multiplier from. Just make sure you sell out that multiplier before it comes crashing down because there's going to be a lot of crashes. I can almost assure you there's going to be an FTX event in the next couple of years based on the regulations and rules or the lack of regulations and rules and enforcement. That's actually coming with this particular SEC. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button, and I will see you guys later.